What needs to happen for money and confidence to return to Hong Kong?
I think there are a few things, right? So for Hong Kong, it has been challenging for the last 2 years, and that's for a number of reasons. So high interest risk environment, geopolitics, contraction in global trade, that's been difficult as well. And there has been a lack of confidence also because of the slowing Chinese economy and how closely we are related. I think one thing that's been consistent, you would have seen that policy measures have been consistently rolled out. So there is strong signs of government support. And yesterday, the big announcement about 278 billion stimulus that's coming, we are waiting to see how that pans out. But that's, again, an injection of confidence into Hong Kong and to the Chinese economy. Now, for us, I think Hong Kong has taken proactive steps in the last year, especially if you look at the efforts into expanding the friend circle, visits to Middle East and visits to ASEAN. It has focused on innovation and new economy sectors. So Hong Kong is now home to 800 fintech companies. It set up an office for attracting strategic enterprises, and that happened last year. We've already got 20 strategic enterprises that have signed up to set up in Hong Kong. So I think the direction that we are going in is the right one. And if you look at Hong Kong as an IFC, I mean, you mentioned it earlier, the AFF this year, 3,000 delegates coming back to pre-COVID levels. We have policymakers from Indonesia, Thailand, IMF, ADB, Germany, Croatia. And I think that's a sign that, Hong Kong is still a place where the world meets to do business.
Now, as we wait for central banks to continue to deliver their policy, this is going to continue to drive markets. The PBOC left the LPR on hold earlier this week. Will China's lack of policy easing and stimulus weigh on the market as much as we wait on the Fed for its pivot?
So let's talk about the Fed. We think at HSBC that the first rate cut will come out around June this year. Obviously, when you see the yield curves in the last month or so, traders are expecting a much more aggressive cut. But you also hear Fed and ECB talking about, look, we need to be cautious with this pace of cuts, and we need to be more cautious when loosening monetary policy because inflation risk still exists. So we think that first cuts probably in June. From now till end of next year, about 150 bits of cut. Now that's going to be a stimulus to the economy as well. That's going to be lowering borrowing costs. That's going to be hopefully increasing consumption. And I think that's a good sign for Hong Kong and for the global economy as well. Now I think the Chinese stimulus policies have to continue. It's been going on for a year, as I said earlier. It will have to continue. But I think that the Fed cuts are probably something that everyone really is looking forward to. Now, how that affects the Hong Kong economy, the Hong Kong interest rate will obviously move in the same direction as the US interest rate. But whether it's going to move at the same pace to the same extent. If you think about interest rate rising cycle that has just passed, the US rates actually went up by a few times before Hong Kong rates started to follow. But that's going to be in the same direction, and I think that will help with the Hong Kong economy.